Thanks for joining us, everyone. Our faithful leader Chris is away today, unfortunately, so you'll have to be stuck with me. But we've got a big one today, so let's get into it. Jack, some oil going through the Strait of Hormuz finally.
Yeah, so there was a group of tankers that have basically been trapped in the Strait since the conflict began. And yesterday they were able to pass all the way through. And they're not Iranian-backed ships, so these were ships from other countries that have been sort of sitting there for 3 months. They contain 35 million barrels of oil, so obviously that's going to be a huge boost to the supply. And as we've seen over the last few weeks in particular, the supply of oil through the Strait has been the key factor in the oil price. So the oil price dropped again overnight. Key analyst firms are indicating there's roughly 5 million barrels going through the Strait per day, which is obviously better than the zero it was a few weeks ago, but it's still well below the 15 million per day that was pre-war. So yeah, until we get to that level again, there's still got to be volatility, and until the peace deal is fully finalised.
And probably puts a floor on the oil price for the short term as well.
Yeah, exactly.
CPI and big numbers out of Australia.
Yeah, so we had the CPI drop yesterday, obviously the measure of inflation. It was sort of a mixed result of sorts. Headline inflation actually dropped down to 4%. Mainly due to the government-imposed sort of fuel excise, which dropped the Bowser price for Australians. However, the trim mean CPI, which takes out either end of the spectrum, so it's the middle 70% bucket price of goods. So it's mainly food and petrol prices, which can have big daily changes, as you'd see if you go to the petrol pump. It can change on a whim. Take those out, inflation actually jumped up again. So inflation is still sticky, and it's going to remain sticky as the full impacts of the reduced oil supply still flow through the economy, because up until now we've kind of been largely insulated, and it's going to have a delayed effect. So yeah, inflation is still sticky, and it's still going to hang around and be an issue for the RBA to deal with for the rest of the year.
Okay. Has there been any movement on interest rates or anything like that from it?
Not as such. It kind of just confirms the hawkish bias that's been existing. So the RBA has kept a hawkish tone. They've sort of haven't guaranteed or implied that there's definitely going to be a rate rise at the end of the year, but the tone is still more likely than not.
Cool. Excellent. And today, what have we got? A bit of Australian ABS figures.
Yeah, so following inflation yesterday, we've got unemployment rate being released today. Obviously, another key factor in the RBA's decision making for their interest rates moving forward. It was a surprise jump last month, so unemployment actually rose. The RBA, while it's not good for Australians, obviously out of work, sort of welcome for the RBA, because it means there's less people with discretionary spend money, which sort of takes the sting out of inflation, less people pumping money into the economy, which obviously helps cap inflation. Unemployment tipped to drop a little bit, so that means more people will have available funds to spend. So obviously goes into the RBA's decision making on whether they need to raise rates or not.
Cool. And obviously the US, the big figure, really.
Yeah.
Pretty much the most important one for the market.
Yeah,
today.
yeah. So following our own inflation data yesterday, the US will release theirs later tonight. Probably one of the biggest data points on the economic sort of calendar each month. It's also tipped to rise 10 basis points. A basis point is 1/100th of a percentage. So 10 basis points is 0.1%. So that's just your reference for that. But yeah, tipped to rise 10 basis points, which means inflation is still hot, supports the Fed's hawkish stance turn.
Now the dollar's had a good few days as well.
Yeah.
Into it, so.
Yeah, US dollar performing really strongly after sort of struggling on the previous 12 months. It's now, performing really strongly against all other currencies.
Yeah, cool. All right, and the big movers for the day. What do we got? Gold.
Yeah, so when we talk about strong US dollar, the converse of that is gold's got to struggle. and rising US interest rates raises the yields on bonds. So there's alternative assets for investors to go into that'll actually get real returns. They're not going to get real returns from gold. They're just getting sort of the price appreciation in gold and the store of value. So bond yields rising, interest rates rising, strong US dollar will all put downward pressure on gold.
What's the outlook like for it with potential central bank purchasing? Do you think there might be potentially a floor at the bottom somewhere?
There will be a floor. What that floor is, I'm not too sure. It has, you can see on the chart, it's touched below $4,000 last night towards the back end of the trading session and opened below 4. So that's obviously a key psychological level. Long term, I think gold will appreciate again, sort of what we saw pre-conflict. It just, again, the Iran conflict's the big spanner in the works at the moment.
Right, and Brent oil, UK. What's the outlook of this?
So we talked about flows going through the Strait, and you can see the impact it had on the oil price. In a few minutes, we'll sort of have a step back and look at oil over the last few months, but you can see the impact on news of outflows through the Strait and just the key impact it has on the oil price. It's still very volatile.
Cool. And equities going the other way. What's the driver here?
Yeah, so the last few days, we've actually seen a lot of pressure in US equities. Mainly, again, rising interest rates has made investors nervous about the hyperscale tech companies. Obviously, they're doing a lot of investment, a lot of spending, and all of that was debt-based, so they were borrowing money to then invest in the company. Rising interest rates obviously boost those borrowing costs, so it becomes more expensive to be able to do that. And investors were starting to get a bit nervous about what that actually means long term, because a lot of these companies aren't generating any profits at the moment. It's all of their value is based on potential, and it's all well and good to invest in potential, but at some point or another, investors will want real returns. Oh, and sorry, the spike in that was Micron Technologies, which is a chip maker, one of the 2 US chip makers. They released their earnings report after hours last night, well exceeded expectations. The share price went up 12%, and given how reactive the market is, that was enough for investors to jump on and think, oh, it's not all doom and gloom. So we'll see if that sustains today or whether the overall narrative continues.
Yeah, could just be a dead cat bounce, but we'll see.
Yeah, it could be.
Okay, volatility, what's happening here with Bitcoin?
Yeah, so we can see Bitcoin it continues its struggles. We talked about the 60K psychological level, I think it was last week, and it dipped below that yesterday. So there was a bit of volatility yesterday. I think the big catalyst for that was the big BlackRock ETF fund, the IBIT, which is the largest Bitcoin fund in the world. There was close to $400 million of outflows over the last couple of days. So investors are sort of taking their exposure away from Bitcoin. That had a large effect on the Bitcoin price, given the amount of coins that fund holds.
And our chart of the day, back to Brent.
Yeah, so just having a step back at Brent, we can sort of look at it day by day, but we'll sort of look at the bigger picture. So you can see how much the price has come off since the start of the conflict. Only at the start of the month, it was just below $100. It's now sitting under $75. Obviously a huge drop. Fundamentally, we talked about sort of flows, and that's what investors are going to be looking at, flows through the Strait of Hormuz. The ceasefire negotiations, there's been no negative reports along that, so investors are assuming it's progressing towards a permanent solution. There's been no increased conflict, so that's positive. On the technical front, we can see the yellow 50-day M&A has started heading downwards following the recent sell-off. And the price has now dipped below the 200-day moving average, which is going to be a key point. That's going to act as a resistance point, so any potential rally will have to fight through that resistance, so that could cap any bounces, so we'll keep an eye on that. And we can see the RSI is now at 24, which means it's deeply oversold. The sellers have all the momentum, so it is going to take a fair bit of buy momentum to to shift that. So yeah, a lot of downward pressure on oil at the moment, but we can see how quickly it can turn. So definitely one to watch closely.
Yeah, just want to probably add on that as well. I didn't really notice this before, but it looks like there's actually a head and shoulders at the top there, which if you look at the projections, so if I can actually just get my hands up here. So that would be a neckline there, there'd be another neckline there, and the projection would be that much further below that, which would take it down to about $60. Not financial advice, don't follow it, but that looks pretty clear from that technical setup as well. So yeah, very good. And article a day, Micron.
Yeah.
Should be getting sent out to everyone pretty shortly, I would say, after this. So,
yeah, that'll come through this morning. That'll just explain the earnings report, sort of the outlook, and sort of that AI sector in the US as a whole.
Yeah, cool. That's it, guys. Any questions on anything?
Chief?
Yeah, is the dollar rally purely because the market is now making a hike later this year, or is there some other elements going on?
Largely that's the scenario. So obviously Kevin Walsh was seen as a dovish successor to Jerome Powell before he came into office. Trump was really keen to lower rates. Since he's come into the office, delivered his first rate decision, which was a hold, but his stance flipped 180 to, rather than dovish, it's gone to hawkish. Markets have already sort of priced in a hike later this year, likely another one early next year. So that shift has really changed the outlook of the USD. Kara.
Quickly one, just thinking about the comments you're making on the way the CPI for Australia is calculated and the impact the fuel prices have had and the exercise the government's done. Their extension to keep it down from now, July to August, do you think that's an attempt to try and keep the Reserve Bank from doing an interest rate rise in August because the numbers will be lower for that extra month?
Potentially a bit of that, potentially a bit of trying to get Australian voters on side with them by keeping fuel prices lower, assisting the cost of living. So, yeah.
I'll just jump into that. It should actually impact the RBA whatsoever because they're looking at the trim mean, which actually excludes the petrol prices. That's purely a political play for voters.
Thanks for the honesty.
Yeah, it's just reality.
Yeah, thanks.
Anyone else? Cool. Thanks, guys.
Thank you.